Good morning, ladies and gentlemen. Thank you very much for joining us despite the busy scheduled day, and also come all the way from the station to the south, which is a bit different from the place that we usually have this meeting in. Today, as you can see, I'm going to talk about three topics. I'll talk about the financial results of the previous fiscal year, and then the outlook for this fiscal year together with the management policies. And then third is the next medium-term management plan. I'd like to share with you our thoughts behind this plan. First, on the review of the financial results of fiscal 2018. As you know, in fiscal 2018, the sales have increased by 1%, the business profit was down by 4%, and profit attributable to the owners of the parent company was 29.6 billion yen, 49% of the previous year, which was quite disappointing, and I really feel sorry for this. And for business profit, in the fourth quarter, 6.4 billion upside was seen. As you can see, international seasonings price hike have had more impact than we had expected. And in healthcare, the expenses were less than we had expected. And also, the share of profit of joint ventures have increased as well. And let me just give you the highlights by business segment. First, on Japan food products, frozen foods and coffee products have seen sales decline and profit decline, about 9 billion yen decline in profit year on year. So this was the main factor for the entire company's profit decline. For international food products, the mainstay, the seasonings, was expecting the much higher raw materials cost, and we have focused on price hikes in order to respond to that. And the sales growth slowed down because of that, but together with the efforts to reduce production costs, we would be able to manage and overcome the cost increase. But there were some impairment losses, and also the international frozen food profit drop were there, so we were not able to offset all of those negative factors. And for amino science business, saw the business profit increase by 4.1 billion yen, which was the main contributor. And the amino acid for pharmaceuticals and foods achieved a record high profit, and pharmaceutical custom manufacturing enjoyed large increase in sales and profit. And in life support, with the steady growth in electronic materials and personal care ingredients, we were able to cancel out the decline in sales and profit in animal nutrition business. And as for profit attributed to the owners of the parent company, U.S. frozen food business and JV in Africa posted impairment loss in the third quarter. But there was also an impact of food business in Turkey, which has the CRP increased and posted impairment loss. But this was actually incorporated in our revised forecast that was announced at the third quarter earnings. And next page. If this is the factors influencing the fiscal 2018 business profit, the forex had a 1 billion yen positive factor, and minus 9.7 for Japan food, and 4.3 billion for overseas food, and 3.2 for impairment loss, and 3.2 billion for life support, and 200 million for healthcare. And from this slide onward, there are no handouts distributed to you. It's just the one that is on the screen. And this is about Japan food products. The past 8 quarters, year-on-year growth was shown by quarter. And pie chart shows the BP breakdown in the fiscal 2018. And Japan food products total is shown by black line, and fiscal year 2018 dropped by 23% year-on-year. And the orange line, which is the seasoning and processed food, this is minus 6%. And this was primarily due to the cost increase in restaurant and industrial use. And home use business, as you know, was affected by the extremely hot weather in summer in the first half. And so it slowed down, but in the second half it recovered and back to the same level as the previous year. But industrial and restaurant use was in a negative number, and frozen food 47% decline in full year. But the production cost was increased for the full year, and this was a drag. And also in the first half, the new products from the previous year were now disposed of as inventory. But in the third quarter and fourth quarter, the gyoza dumpling and fried rice were focused, and the sales have recovered. But rice products and fried chicken still had some challenges. And green line, the HAF, the business profit dropped by 35%. As you can see, in the third quarter and fourth quarter, it looks it has deteriorated. But from the third quarter, stick type products, we have spent marketing expenses to counter the competitors' actions. And also, in addition, the liquid coffee reduction was decided, and personal liquid coffee inventories were disposed of in the third quarter as a result. And the new products that were expected to be launched in the fourth quarter was cancelled. And so that is how we ended up with this level. And stick type coffee and gift set and out home, the mainstay products turnaround will be done in the next fiscal year. Now, the overseas our international food products local currency basis business profit. The black line shows the entire international food products. The business profit went up by 5% year-on-year on a local currency basis. Excluding the impairment loss related to trademark, the business profit would have gone up by 13%. And there was an impairment loss in Q3, and excluding this, we would have increased by 8%. In the third quarter and fourth quarter, there was a late recovery. And I will explain in 5 stars later as well. And blue line, the international frozen food, 46% decline. But there was support from Japan for production stabilization, and replacement of local top management were done. It was not perfect, but in the third quarter and fourth quarter, we have seen improvement upon the production losses, and the gap has been reduced. But the fundamental reorganization to shift focus to Asian cuisine has yet to be done. So logistic efficiency improvement is one of the challenges, and together with that, we like to make steady progress in the next fiscal year. And this is the 5-star sales changes for the past 8 quarters. The black is the total of 5 stars. For the full year in fiscal 2018, the sales increased by 5% year-on-year, and different countries are shown with different colors. And the highlight is that there are stars in the line chart where the price hikes were done, and double circles show the product quality revisions that were done. The fermentation raw materials costs increased in fiscal 2018, so Ajinomoto and Ajinomoto Plus and flavor seasonings, the price hikes of those products were more focused and implemented compared to previous years. And right after the stars, you can see sales growth slowed down until the competitors followed suit. The sales growth decline was seen in each of the subsidiaries, but in the fourth quarter we have seen some positive impact. And dual circles show the price hike in Thailand and Masako in Indonesia, and also the quality provisions. And there are two special points to note. In January, in Thailand, there was a price hike of Ajinomoto and Ajinomoto Plus that was approved. And we have to get approval from the authority for price hike, and this was the first time in 7.5 years. And so the fourth quarter have affected this price hike as well. And in April, in Vietnam, the Ajinomoto main products price hike was done, and the total change over, or rather last minute sales or demand was seen in March, so you have to take account for that.
So next is the forecast managerial policies for fiscal 19 and plan. So for fiscal 19, it's the final year of the midterm plan. However, due to the slowdown in the food business, it is now hard to achieve the midterm plan targets. The forecast is shown here on this chart. The main measures are mentioned here. However, the food business is sluggish, and due to the slowdown, we have said that this is the factor, but we believe the reasons why are the following. Due to the progression of ICT, consumption patterns are diversifying, and it's accelerating in diversification, and also due to the emergence of e-commerce, digital transformation investments are needed, and with that, the consolidation of the retail and distribution industries are being promoted, and hence, sales channels and its structure is largely changing. Due to that, markets were led by the mass market brands in the past. However, competition is intensifying, and we are seeing its impact. And this stands out particularly in developed countries such as Japan, but in major cities and emerging countries, this is happening as well. Therefore, going forward, you need to have dominant quality advantages driven by technological capacity, as well as through digital marketing. You need to enhance your core brand and do big data analysis and visualize differences in preference, or else we are in a serious competitive environment where you're not able to survive. We're not going to start from the next midterm plan with regards to our efforts. However, the structural targets, we wish to ensure that we will be able to achieve those targets in the future, and we will start the reform efforts from fiscal 19. We will do concentrated investments into our core businesses so as to strive for a steady growth and grow sales by 3% and business profit by 4%, and aim for business profitability of 10% and ROE more than 10% in the next midterm plan. In order to do so, for categories that can become the global top 3, we will position them as core businesses and will concentrate our growth investments. And thirdly, on the other hand, for the non-core businesses, we would like to control investments so that the investments can be minimized and consider whether we should withdraw or shrink the businesses. And fourthly, on a company-wide basis, we will engage in digital transformation, and we will be working in a digital-driven way for growth, and we will also work on operational efficiency at the same time. So this is a waterfall chart that looks at the forecast for business profit. Please look at the forecast by segment for fiscal 19 that has been handed out at the same time. By business, we are expecting organic growth to be up by 4%, that we put together in a cautious way. And we are expecting asset-light related costs to increase, and business profit increase, therefore, is expected to go up by 10.8 billion. Fermentation raw material is expected to go up by 3.6 billion yen, and we are expecting a negative impact from FX of 2.8 billion yen, and thus the business profit expectations are 97 billion. By business, here are the highlights of each business plan. For our Japan food products, we're going to concentrate on number 1 brands that have strength in seasonings as well as processed foods, and we would like to look at soups and soup stocks that are number 1, as well as Chinese food cuisines that are number 1. And with that, we are going to strive for 3% growth, including peripheral products as well. Also, for Japan food products, we are going to strengthen digital-driven marketing. We're not going to be doing this group by group, but we are going to concentrate our efforts, and we're going to support marketing on a company-wide basis. And secondly, for frozen foods, we are going to concentrate our efforts into gyoza dumplings. As for rice products, we would like to expand our lineup, and by concentrating our efforts here, we would like to put utmost priority on earnings growth. For AGF, we would like to introduce new products with new value for stick beverages, and we would like to strengthen the premium category as well. By doing so, we would like to engage in new areas rather than engaging in price competition. For personal liquid coffee, it's going to end its life, and Starbucks products are going to end as well. And with that, we are forecasting a decline in revenue and profits. Finally, we will be accelerating EC-related efforts on a group-wide basis. Premium products for mall-type e-commerce sites and products with health values are going to be strengthened. And we would like to acquire the small mass market and try to lead in acquiring the middle mass market as well, and try to create a pattern around this. Over the short term, we'll be starting cross-border e-commerce as well, and we would like to ensure that there's collaboration between marketing in Japan and marketing in East Asia. Turning the page. This is our plans for international seasonings. This is going to be centered around the ASEAN region, and we would like to expand the area for umami seasoning Ajinomoto. We would like to leverage our technological advantage and also strengthen the quality around flavor seasonings and steadily expand, and also have menu-specific seasonings that conform to local markets. And because families are more two-generation in the city area, we would like to ensure we capture the consumption trends as lifestyle patterns changes. Over here, the picture shows a crispy fry from the Philippines. It is for fish. It is a new type of deliciousness that we are providing instead of no breading and no batter. And we have improved the oil splash attributes, and this product tends to be doing very well. Next is highlights of the healthcare business. For the pharmaceutical custom business, the ADC contract development facility has been completed last fiscal year, and also oligonucleotides development contract center has been completed in the fourth quarter in Osaka with Gene Design. For the pipeline for oligonucleotides contracts, we would like to connect our efforts with the Tokai factory because they have large-scale contract facilities. For commercial pharmaceuticals and drug development pipelines that are raised here, as you can see, contracts are expected to steadily increase. So we would like to ensure that the CDMO business increases by double-digit this fiscal year. Here's life support. With electronic materials at its core, together with specialty chemicals, we are striving to increase sales by 2 billion yen. As for electronic materials, due to the expansion of cloud services, server demand has been captured, and it's doing well. Also, new applications would be another area of focus, such as games, automobiles, and so forth. We are expecting the markets to expand, and we have started to engage in efforts. So we're expecting steady growth during the course of the next midterm plan as well. Next is efficiency efforts through structural reform. There are two highlights here. First is structural reform around global frozen foods. We're going to start measures to become asset light from this fiscal year. As of April the 1st, we have established the Global Frozen Foods division. We are going to collaborate together, and we are going to oversee the integrated strategy for global production, and we are going to offer local support as well. For policies, we need to expand capacity for Asian cuisine and desserts globally, so we will focus on that. And we will also strive to improve ROA through our asset-light efforts. Also, for North America and Europe, we still need to do logistic-related measures, so we will take countermeasures and establish a better supply chain, and we will extend our efforts to support the local markets. Each of the subsidiaries will concentrate their growth investments into their core businesses and control other areas so as to strengthen their business structure. Secondly, overall, With regards to common cost, we would like to reach 2.5% against sales in 2020, and we have already started to implement measures. For this fiscal year in particular, we would like to review the corporate service function and try to promote shared services. By executing this, we will strive to reach the target that we raised for fiscal 20.
Next, the production system reorganization for domestic seasonings and processed food. In April, those three production divisions were integrated into a manufacturing subsidiary called Ajinomoto Food Manufacturing Company. In the fourth quarter 2019, the food seasoning production will be integrated into new Mie factory. And in the second quarter 2019, new Kawasaki factory will follow by consolidating soup production. The production efficiency will be dramatically increased for seasonings and processed foods. In new Mie factory, weekly managed flexible production will be realized, and production with the lot size 1/7 of the conventional one can be expected. So this will give us a tool to support the growth strategy of Japanese seasonings and processed food businesses. And this is a summary of the outlook for fiscal 2019. This is the forecast for each of the profit levels from the business profit level. And the overall losses to be incurred from asset-light initiative has been incorporated in other operating income and expenses for about 7 billion yen. And then the profit attributable to the owner of the parent company is expected to be 50 billion yen. And there was some expense included in the business profit, so from the asset light. So in total, 9 billion yen has been incorporated from asset light. This is the cash management forecast for fiscal 2019. Fiscal 19 operating cash flow is expected to be 120 billion. So for 3 years, it will exceed by the MTP by 15 billion yen. As for investments for group growth, R&D expenses are expected to total 29 billion, and there's no major M&As expected. And also, the planned repurchase of non-controlling interest is now on hold because of negotiations reasons, although this had been carried out so far. So in fiscal 2019, we plan to pay 32 yen per share as dividend, and we can realize the payout ratio of 35%. And also 3-year total shareholder return is expected to be 63%. And this is the progress on fiscal 2017-2019 and difference from the medium-term management plan. And this is the forecast and performance gap versus the medium-term management plan in terms of business profit. And this is the non-financial initiatives. And this is the progress that we've made in most of the themes. And for major themes, we are in line with the plan, or more progress has been made than planned. And also for environmental targets, there are numerical progress that has been shown in the separate attachments. So please take a look at that at your leisure. And let me talk about new medium-term management plan next.
First is the key message. Through asset-light measures and digital transformation measures, we would like to enhance our competitiveness and go back to sustainable growth. We are aiming to become global top 3, and we would like to increase the number of business categories that will enable us to do so and concentrate on them. We will create innovation and ensure that we are able to sustainably grow. In order to do so, we need to think about asset efficiency and select the better businesses and concentrate on them, and also look at assets apart from our core businesses so that we can make our balance sheet lighter weight. We will also do digital transformation so that we can create a new value for customers and grow, and also promote operational efficiency. That is the kind of medium-term plan we would like to have. Financial targets and the milestones. We raise the right-hand side block so that we could have a target over the longer term and to realize our competitiveness over the longer term. As an indicator to become one of the global food companies that's in the top 10, the capital efficiency targets have been raised upwards, which is ROE of 11%, RIC of 11 to 13%, and business profitability based ROA 12%. In order to realize this structure, top-line growth targets will be raised on the next page, but we will be concentrating on our core businesses, and CAGR-wise, we would like to sustainably achieve 4% or more. You can see the ovals on this page where we show the core business ratio. Currently, it's at 60%, but we would like to raise this to 70% in fiscal 2022 and ultimately 80%. From this fiscal year, for the non-core businesses, we will intentionally make them smaller. So in the next midterm plan, CAGR is expected to be around 4%. Then after, we would like to phase it up so that CAGR can be 4% plus alpha. So this will be the main part of strategy during our midterm plan from fiscal 20 to fiscal 22 in order to create this structure. So for business profitability, currently it's a little bit over 8%, but we would like to bring this up to 10% by fiscal 22, and we're aiming for 13% ultimately. So we would like to enhance asset efficiency in order to reach our target. And from this fiscal year until fiscal 21, over a 3-year period, we would like to reduce our assets by approximately 100 billion yen. I'll talk about cash balance later on, but for growth, investments, and shareholder return, we would like to ensure that we continue on with a similar level as the current midterm plan. For asset light, I'd like to elaborate a little bit more. We're going to look at it in two ways. One is resource allocation, which is by repatriating our group deposits, we would like to repay our debt and also to sell down strategically held stocks. Thirdly, we would like to consolidate our functional subsidiaries and also review our joint ventures. With regards to reducing business assets, we would like to look at global frozen food businesses in the Asian food category as well as desserts, and we would like to make key investments there and rebalance our assets starting from this fiscal year. For the other businesses, I will explain from the next page onwards, but in any case, we would like to reflect our measures in the next midterm plan. So we're focusing on the core businesses, and we're going to determine what is not core. We will be applying 3 standards. On this slide, we show a vertical axis which shows growth rates, and also ROA is on the horizontal axis. And the standards for growth rates is a CAGR of 4% or more. This will be the standard for ROA standards. Globally, food amino acids companies will be looked at, and the average of 8.4% will be positioned as the center. And over the short term, we need the businesses to exceed the minimum of 7%, and the condition will be that it can become 12% on company-wide basis in the future. And number 3 is not it's hard to quantify, but we will look at the branding power as well as how much the technological capabilities can be leveraged. With that, we will look at businesses that can become top 3 globally, and they will be positioned as core businesses. And for the non-core businesses, during the fiscal 19-21 period, we will either shrink or withdraw from these businesses. For the other businesses that are on the upper left-hand side or the bottom right-hand side, we will look at its efficiency as well as re-establishing growth. Whether or not that is possible will be the basis of which we can determine the business's direction in the future. So here on this page, we will look at how we can enhance the growth rates of each of the core businesses. We basically would like to become closer to the customers. We will look at the 4 angles, as you can see on the left-hand side, and we will consolidate the group functionalities, the businesses, subsidiaries. We will collaborate increasingly so that the core businesses that have strength can also develop the small mass market and eventually capture the middle mass market as well, so that we can ensure we grow by enhancing our brand power. We will do big data analysis for the consumers and channels and also strengthen e-commerce. As for product categories, we would like to do agile product development and do data-driven marketing in order to develop the small mass market. And thirdly, we will look at core technology and brand strength and enhance them. And fourthly, we would like to shorten the supply chain that adapts quickly. Next, towards the next medium-term management plan, with regards to cash management and investments and shareholder return, it's shown here. For operating cash flow, 350 billion yen is what we are expecting, which is the same level as the current midterm plan. Asset-light cash-in is expected, and also borrowings added together is expected to be a cash-in of approximately 400 billion. For investments, we are expecting approximately 300 billion, which is 220 billion of capex and 80 billion of M&A. And we will control it there. And for shareholder return, we are expecting more than 100 billion yen. That is our plan. By doing so, the policy for shareholder return is going to be sustained from the current one. Finally, is corporate governance structures which will be changed. The aim is three, which we show here. One is we're going to increase the amount of non-executive directors so that we can strengthen the supervision over core measures and supervision over affiliated companies. We are also going to assign a CDO, Chief Digital Officer, so that we could make progress on digital transformation and go back to the growth trajectory and make our efficiency stronger. And also, number three would be we have the first female director that has been chosen internally, and also on the management committee, we have selected a non-Japanese member, which is a senior managing executive officer, and we would like to create innovation through diversity. We would like to enhance the effectiveness of the BOD, and all of the three committee heads will be outside directors. And also, we will also have a management foundation advisory panel that will be directly connected to the BOD so that our managerial decisions can be expedited. We will strengthen our governance so that the transformational speed can be accelerated. That is led by management. That is all for myself. And the roadmap of the midterm plan as well as the FX impact is shown in the handed out material. So I would like you to refer to it later on. Thank you very much.